So if you're just starting out with trading meme coins, you probably don't know which type of trading techniques you should use. You have this Axiom screen in front of you and you open one chart and you just see this chaos of a coin and you don't know which entry you should take, where you should buy, where you should sell. Uh, that's no problem, of course, but before you put in real money, I want to show you today some of the trading techniques that I personally use and that actually are some basic trading techniques that a lot of people use to not necessarily make 100x, but make consistent 2 or 3x's over time. Then at least you know, for example, if you see a chart like this, where you would have bought, where you could have sold. And there's a couple of techniques. The first one is the accumulation phase, which is basically after a huge spike or a huge drop in the price. Usually the price will stagnate or move sideways for a while. This is accumulation. This is when a lot of investors actually lost interest and only the strong community stays within the coin. So therefore it has the time to just accumulate sideways, right? And this is actually a great moment to buy as long as the narrative is there, as long as the community is there, and as long as you see that it's slowly going upward in this accumulation phase, right? So that's exactly the moment where you should buy, because at some point it will break out and then you can make easily a 2 or 3x profit. Okay. The next one is quite similar, but it's actually the all-time high breakouts. So as you can see here in the chart, it has hit the all-time high once and then retraced a little bit, and then it tried to hit the all-time high again, but it retraced again. And then a third time, it actually moved a bit sideways, and then it actually broke out. So if you see a pattern like this, and you see that after the second time it tried to test the all-time high, and here it finds a support level, that's actually a good moment to potentially buy in and then sell once it breaks out. So don't hold it too long. But yeah, that's basically how you can notice that. So you can also see, of course, there's an increase in the buying volume as the all-time high gets tested. And a lot of whales are buying in as well. Okay. Then we have the Fibonacci retracement. And I know that this may sound a little bit confusing, but it's basically just a scale that you can put on top of your chart so you can actually find the psychological levels where people will buy and where people will sell. So what you usually see is that when there's a huge spike in price, obviously it won't go on unlimited to 100 or 1 billion market cap. There will be a point where people will start taking profits, like mainly the people who bought here. Usually there's a psychological zone after people start taking profits that it will go down to the 618 level. And that's actually a great moment to buy, because psychologically that's the point where everybody has taken profits who wanted to take profits, and then only new people or true believers are actually still in the project. And that's why usually that's called the golden ratio. This is around the area where it always finds support. Of course, if you take an entry here and it moves down further, then you should sell. But usually if you buy it here, it forms a little bit of an accumulation and then it goes up again. Yeah, of course, you have to watch a bit more detailed videos on that, but that's a great technique. If you buy in here and then sell in here again, you can easily book some profits as well. The next one is the support levels. And this is what you can actually see in the chart, where if you have upwards price movement, then of course it won't go in one time, right? It will go with ups and downs, ups and downs, ups and downs. So what you can see here, for example, is that the support level here is an earlier dip, where the same level has actually been reached. And the reason why that is because at these levels, a lot of whales have order blocks, and order blocks basically mean that the whales set a specific buy order at this price because they see that that's the support level, right? There's a huge likelihood that that's the lowest the price will go instead of dipping further. That's why they want to maximize the profits, so they buy in here, and then afterwards they see the movement upwards and then they sell again. And of course, then the support level can be different again. Usually, how you can also tell the support levels apart is from previous all-time highs or previous tops, or indeed from previous bottoms if you're moving sideways. Then we have narratives. Of course, if you look at narratives in the meme coin space, usually there's always a narrative going on with specific coins. It can either be a cat, it can either be a dog. I think a couple of days ago it was a troll face, and then instantly what you see is a lot of different types of variants coming from the same coin. Recently, what I saw is that house coin or art coin. Those are some of the narratives that are going on. For example, this one, house coin, is at 63 mil right now. And you can also see, okay, if this one is 63 mil, you can already tell that there will be a lot of narrative, like beta plays basically coming out, which might be a little bit similar, right? Maybe apartment coin or maybe car coin or those type of things. And then people, instead of buying into this house coin, they will want to find a beta play, so a narrative under the bigger narrative, and then buy into that. And you should always check the volume, of course. You can easily do that in Axiom here with metrics, and then put this. I'm actually sure if I put now car coin, well, there isn't one yet, but let's say that can be, for example, a beta play there. So always be on the lookout for that. There are a few disclaimers though. Of course, you can study these trading techniques, but always keep in mind that meme coins, of course, are highly volatile assets, so they will go up and down a lot. So you should really not be emotional and only use money you're willing to lose, of course. And also, of course, these techniques work better if there's actually a bull market going on, because there's just a lot of volume going into the market. Then it's way easier to make profits instead of a bear market, or instead of a market like we are currently in, which is a bit moving sideways or a bit hesitant. And of course, for new projects, I wouldn't suggest to try these techniques with new coins, because 9 times out of 10 or 99 times out of 100 actually, they just rug instantly and there's just not enough volume. So only try to do these techniques with meme coins that actually have, for example, a 1 million market cap or higher, or at least a week, older than a week, for example. In general, if you're just try to book steady 2 or 3 X's, you can also look at bigger meme coins. Of course, here, for example, is a good example of Popcat, which recently also had a huge accumulation phase here, and now is slowly moving up again. So if you're booking just 2 or 3 X's regularly, that actually is way better than to want 100 X, which just wouldn't happen, you know? So that's about it. Of course, try to learn these techniques, try to spot them, and hopefully you can put in some nice trades. If you want access to Axiom, check the link in the description. That's the only way you can get access. It's a great tool to scan these coins. Also, to not get rugged. In my previous video, I showed how important these metrics are. So yeah, hopefully that helped. I'll see you later.